The Canadian dollar has been gaining momentum, outperforming the U.S. and other G10 currencies with that conflict in the Middle East. Iran, of course, vowing now to escalate attacks in the Gulf. Let's go to Bala, CEO, AIP Asset Management. Jay, thanks for joining us. Why do you think the Canadian dollar is a bit of a go-to right now?
Yeah, no, thanks for having me on. Right now I think there's, if you look at the world today, I think people are looking for a more stabilizing force. And if you look at Canada, Canada's got strength in oil and gas and resources and a stable financial sector. And so I think, based on that, I think you're going to see a bit more strength on a longer term basis in our stock market. And I think you're going to see more people looking to Canada as more of a safe harbor, right?
Are other currencies also a safer place to go? Are investors looking elsewhere?
Yeah, I mean, look, the U.S. dollar is always the go-to in terms of just sheer size and depth, and that's always, I think, the first preference to go to. But I think as, the world is becoming a more sort of destabilized place and the world is becoming, more with sort of tariff wars, I think probably people are looking to diversify those bets. And, I think it makes sense to hold some U.S. dollars as well as some Canadian.
There was a deep sell-off at the start of the week. Markets haven't really recovered, or the TSX hasn't, and another streak of red today. You say generally that the markets do well in a war. What are you looking at for comparison?
Yeah, no, I mean, I think the last time, the most similar case to this would be the Iraq war that we had, for a while. And if you look at that, you had the initial sell-off. But the reality is, what happens in a war, right? Like in a war, governments borrow lots of money, they hire lots of people, they build lots of military equipment, and then they fight a war. And all of that, results in better growth for the economy, right? Especially if you're kind of in the North American side of things. So on that basis, I mean, as much as morally a war may be horrible, economically a war is actually kind of positive, at least from a North American standpoint,
yeah.
Right?
A driver of the economy. Okay, we took a look at the price of West Texas a moment ago. It was just hovering under the $80 a barrel mark. We don't know how long the conflict in Iran will go on, but do you think that the price of oil will factor into the Bank of Canada decision?
I do not. I mean, I know it impacts the general consumer, and obviously they have to keep an eye on it. But the reality is oil in and of itself is not part of core inflation. It's part of the broader inflation calculation. And most central banks really just focus on core inflation. How's core inflation coming along? And so, look, I mean, I know oil prices going up kind of hits the pocketbook of the consumer, but in reality, it doesn't really influence policy decisions as much as people think it does.
If this conflict carries on for more than a month or 6 weeks, do you see it as being a pressure on the market? You mentioned markets you normally do well, but there are other ways, of course, the Canadian economy could be affected.
Yeah, no, I mean, you're right about that. But, the reality is I think the markets go up either way. It's not either it's a short-term war, in which case you get a relief rally, or it becomes a longer-term war and people say, okay, well, we're stuck, right? At the end of the day, it's time for the government to step up and really invest into the military and spend more money. So, longer term, as we saw in the Iraq war, longer term, the stock market tends to do well.
Okay, so what markets do you like right now outside of North America?
Outside of North America, I mean, I would pick other safe harbors. Japan's probably a good place to go. They seem to have found, they seem to have had a landslide election. The new government seems to be very pro-business oriented. And, that's another sort of safe harbor, right? The yen's always been sort of a stable or a more stable sort of currency. Japan's been a relatively stable economy in the world. And I think a lot of people will probably start looking back at Japan.
Okay, outside of the war, you still remain bullish on Canada.
I do. I mean, just if you look at what drives our stock market, the vast majority of it is its energy, its resources, particularly gold, and its financial services, right? Like, I mean, that's the entirety or the vast majority of our index. And I think all of those sectors will do incredibly well over the next few quarters.
All right, Bala, CEO, Senior Portfolio Manager, AIP Asset Management. Jay, thanks for joining us.